Hello everyone and welcome back to my channel, Investing for Success. So a big reason that people don't invest in the stock market is that they're afraid of it. They'll see news about the stock market crashing and they'll just have the fear that they're going to invest their money and just lose it all. So we're going to go through a number of charts and graphs today, and hopefully we'll alleviate some of that fear and show you that the stock market isn't really something you need to be afraid of. So let's get right into it. Alright everyone, so I want to start this video by saying that your investment strategy for the stock market should generally be long term. And the reasons for that is if you invest your money and then you need to take that money out and use it for something within a year, then you're kind of at the mercy of the market at that time. So if in a year from now the stock market takes a dive and you need to take your money out, obviously that's going to be a very big problem for you. So the longer term that you have, the more likely that the stock market is going to be at a higher level than when you put it in. So you'll be taking effectively less risk. There's a famous quote by Warren Buffett that says our favorite holding period is forever. And what he means by that is when you've done your research and you've purchased a stock and you've purchased it at a good price and you know that it's a good company, there really isn't any reason to sell it unless you absolutely have to, because over the long term that's going to just gain and gain in value. Let's take a look at the charts and then we'll kind of see more visually why this is the case. Okay, so what we've got here is kind of the entire history up until 2016 of the Dow Jones Industrial Average. And what the Dow Jones Industrial Average is, it's basically 20 companies that are chosen, and they take the average of the value of those companies over time to give you kind of an idea of what the market is, how healthy the market is at the time. So the reason I really like this chart is you can kind of see the major events and how they've affected the market over the years. And don't worry if you can't see all the information on this chart. I'm going to put a link to it in the description down below. So if you want to have a look at the bigger chart and see everything on there, that's available for you. But the reason that I'm posting this chart up is you can see like a major event there in 1929, that would be the Great Depression. And you can see another major event there during the 70s. And that recession there. Also you can see the financial crisis during 2008 when we had the credit crisis and the subprime mortgages that happened in 2008 and how that affected things. But overall, you can see that over the long term, the general trend of the stock market is up. So given enough time, and that's what I discussed earlier about long-term investing, given enough time, the stock market has historically always gained in value. For the sake of being thorough, here's a chart of the S&P 500. The S&P 500 is a group of 500 companies, so it's similar to the Dow Jones. This is actually 500 companies. It didn't start getting tracked until about 1957, I believe. So that's why it doesn't show the Great Depression. But here you can see the 70s recession as well as the 2008 financial crisis. So you can see the general trend here still is overall up over the long term for the stock market. So we've seen from these charts that the general trend of the stock market over the long term has always been up historically. So maybe you're wondering, like, if you've purchased stock just before one of these major crashes, what happens then? Well, let's have a look at this article from CNBC that was published actually in May of last year, where Warren Buffett talks about if he had purchased an index fund for $10,000 in 1942, which was the year that he purchased his very first stock, if he had held on to that since 1942 till today, it would be worth $51 million. So that just goes to show you just how much the stock market has gained in that period of time, and also that's going through all these financial recessions and crises that were over the years from 1942 until today. So that would have been going through the crisis of the 70s and the 2008 crisis, and yet it's gained that much in value. So if you don't know what an index fund is, basically it's like a mutual fund that you can buy on the open stock market. So you can have something like an S&P 500 index fund, which is just a portfolio of stocks that's made up of stocks that are in the S&P 500 companies, and it's intended to track or mirror the S&P 500 index. Same thing would be the case for a Dow Jones Industrial index. It would follow the 20 companies that make up the Dow Jones and be mutual funds of sorts for that particular index. Now that might be a little bit of an abstract example for some of you. So let's use an example for someone that's maybe purchased $10,000 index fund as of July 2007, and that was the peak of the stock market just before the 2008 collapse. So if you purchased $10,000 worth of stock and held on to it for 10 years, from July 2007 to July 2017, that stock would be worth approximately 58% more than it was in 2007. So you can see that purchasing a stock, even at the peak, just before a financial collapse, if you wait long enough, that stock is going to eventually be worth significantly more than you paid for it. So the last thing I want to talk about is the fact that even though the stock market does have a general trend of being up over the long term, that doesn't mean that just any stock that you purchase is going to be successful over the long term. We're going to talk in future videos about how to pick a stock, but you don't want to be purchasing a stock that, of course, is going to go bankrupt during a financial crisis. So just keep that in mind. I hope this video has shown you that the stock market probably isn't as scary as maybe you thought before watching this video. If you found this video interesting and insightful, then please give it a like, and I'll see you in the next video. Thanks.